Now, are Europe's banks strong enough to withstand the fallout if Greece were to withdraw from the euro? Well, the European Central Bank, the ECB, is calling on lenders to stand behind their struggling counterparts in Greece, Spain and indeed other countries caught in the eurozone crisis. But questions remain of whether they can rise to the challenge and the impact any move could have on investor confidence. Well, Martin Koehring is a European economist at the Economist Intelligence Unit, and he now joins me. Martin, a very good day to you. It does seem like a rather tall order, but the big question, can you really be prepared given the potential of this crisis?
Yes, exactly. It would be very difficult, really, to prepare for a Greek euro exit because the knock-on effects would be tremendous. I mean, the first knock-on effect would clearly be on bank deposits, because there would be depositors in countries such as Spain, Italy, Portugal, Ireland that would be rushing to their banks to get their euros out and invest them in for example, a German bank account or a Dutch bank account. So the risk of bank runs that could seriously undermine the economy and then create a self-fulfilling prophecy whereby these countries will then have to leave the eurozone as well, because there's no money really in the economy at all, so they have to print their own currencies again. So if Greece leaves, there could be a self-fulfilling prophecy that the whole eurozone will break up.
Right, but let's for one moment, if it's possible in this situation, be optimistic. In other words, that Greece does exit and we don't have the contagion. Is the system prepared enough to cope with a Greek withdrawal?
Well, first of all, it's very unlikely that the eurozone would remain in its current form, even if Greece leaves. There would be other countries leaving. But set aside this more likely scenario, if Greece leaves and the eurozone does stay together, then there would have to be a much bigger firewall. Currently, there are 500 billion euros available for recapitalizing the banks and buying government bonds in struggling countries such as Spain and Portugal, but that's not enough. For example, Spain still has to refinance about 118 billion euros by the end of this year. And then Italy's debt burden is 1.9 trillion euros. So clearly the firewall is not big enough. And Spain will be the next target. And quite easily after Spain, there could be Italy that would be the target of investors. So I don't think the system is strong enough. And the European Central Bank will have to intervene much more strongly in government bond markets, which has been very reluctant to do so.
Right, but I mean, it's interesting though, because I mean, you know, the ECB has actually said to all the lenders, look, you've got to stand behind the weaker players in the pack, and from what you're saying, they simply haven't got the means to do this. The onus then falls on the ECB, which can't really afford to subvert its own doctrine in terms of it issuing extra currency. So is the way around this perhaps to have more action from other central banks? Because we talk about a eurozone crisis, but it's not just our crisis, it's also the world's crisis. They could also get caught in the contagion.
Yes, exactly. But the IMF will probably not really be willing to put more money aside for a eurozone rescue. They have already pledged a lot of funding for countries such as Portugal, Ireland and Greece to bail those countries out. And they will be even more reluctant to do so now that the eurozone is not able to sort out its own mess. I mean, the bailout fund of 500 billion euros doesn't really look strong enough, and you can't really expect countries such as China, Japan or the UK for that matter to come up with the funds that the eurozone hasn't been able to come up with. I mean, the eurozone stability fund doesn't look big enough, so the eurozone has to step up. The governments have to step up, but Germany is currently not willing to do so because their taxpayers are very, very reluctant, of course, to step up the fund.
Martin, we have to leave it there, but it does sound like a case of ever-decreasing circles. But thank you so much for joining us here for your analysis. It's a rather grim note to finish that interview on. But let's take a look at some corporate news now. This time